Hello, folks. We're going to have a look. Someone asked the question: where do you start analysing the market? What do you look for to start with? How do you look to set up a trade? So, first thing I like to do is I like to look at a weekly chart, at least 5 years worth of data. This is a chart of the euro again, Great British pound. I've picked this one for. You'll see why in a minute. It could be a significant close on Friday night where we were. So, if we have a look at it. You can see we made a low 2015, spent most of this year forming this little inverse head and shoulders pattern down here. We then had a nice 20-cent rally. This was 2016, this was the Brexit vote, 2016. The euro like that, it went a lot higher. And then since sort of 2016, we've been in range. If you just blow this up a little bit, we've been in this range now for the best part of 4.5 years. And all I've done is just put a few levels of support and resistance on. So the 93 has been the ceiling on this range, and you can see 83 has been the lower of the range. And there's a couple of support levels in between these. These are roughly 786 of the old move. You know, if you just measure that, it's about 786 of this, and this is 786 of the drop. And you can see we're spiked through here, but basically closed down here. So I've just sort of put the eye on the closing price. Get rid of that a minute. And it decides to go. There we go. So, and you can see there were nice little patterns in the range. There were a nice little Gartley pattern here, and it went to of course, we didn't know that was the high of the range at the point until we actually tested it again over here, and then that looked for all money like it was going to break out to the upside at that point, because it looked like it was going to complete this ABCD structure. You know, got two really wide-ranging bullish candles, close right at the highs of the range, and then it was looking for all money like it wanted to at least complete this ABCD. But then, as you can see, all it's done since last August is dropped straight down 10 cents to the bottom of the range. So where are we now? So basically, I just like to look at what we've done over the last 5 years, and then just get an idea where we are. And you can see now what's significant about last week. This was Friday's close. You can see we've closed. This is the lowest closing week since this week over here, which was the 24th of June 2016. That could be significant, because if you notice this moved lower, we basically dropped halfway back. Get rid of that now. Don't need that for a minute, do it? Bear with me. There we go. Right, we dropped halfway back from the high to the low. You can see, and all we could do was a 382. And as soon as this thing started to fail at the 382, straight away it set up your ABCD off the swing high. A, B, C, D, and you can see, and you can see the 1.27 of that ABCD swing comes in at your one right at the bottom of the range, right at your lows of the range. I'm going to test these lows. You can see we did. Your ABCD actually tested this low, and then once it extended, the high probability you're going to test the low of the range, as you can see. And that's what it's done. And then all it could do, if we zoom back in again, all it's been able to do is another 382 off. Been able to do another 382 off this swing high, and again tested it once, went sideways for a couple of weeks, tested it one more time, and then it's broken down. But what's significant about this, if we come down to the daily, there's two things can happen here now. On the daily, it's just completed an ABCD. It's like a Gartley pattern. As you can see, the ratios are there. You've got your 1.618 ratio is 618,707. So it could bounce out the traps on Monday. But if it was to break down, go back to your weekly chart, the fact that it's closed lower than it's closed for the last 4.5 years could be significant. And we could be seeing a much bigger correction. the first correction we'd look at, it does break down on Monday, you'd be looking for at least another ABCD like that. That's going to take you down into this area. So then what you'd be doing is be looking for where your retracements come in. So you take one off the low to the high, and you can see your 61% retracement of the all move from 2015 low comes in right there, and that completes your ABCD off the first 382 we made. And then obviously if it were to do a full ABCD off the high, that'd take you down to your 786, wouldn't it? As near as damn it, because it's taking you that much higher. So that'd be nearly 2786. So keep an eye on that for next week. But that's all I do. I like to see where we are on the weekly. Drill down the time frames. You can see we closed at the low of the day on Friday. It tried to rally during the day, but you see it's come down and closed right at the low of the range. So even if you come down to the lower time frame, there's nothing telling you straight away. So this little ABCD here on the 60-minute. Little ABCD, it might just complete that and then start to rally. That'll come in just down about 20 pips or so from where we are now, and then 20 pips down on Monday and then reverse. So be aware of that. It could reverse simply because we're at the bottom of the range. But it's been trading this range for 4.5 years. So, but the fact that it's tested it and could only do a 382, that's not very bullish, is it? So, but you can see at least we're at 83 now, give or take a cent. That's going to be 78.40. So that's 4 cents, 4.5 cent move if she starts to the downside. So that's a good swing. So we'll see what unfolds anyway next week. So that's what I'm seeing in the euro, folks. So take care and have a nice weekend.